Figma stock jumps 250% on its first day of trading. Learn the 3 lessons from the biggest IPO in decades that will help you spot the next one.
Figma is a collaborative design platform, and we're trying to make it so you're able to go from idea to design to production and really take people through the entire life cycle of creating digital products.
IPO mania is officially back, and yesterday Figma gave us a debut for the history books. After pricing at $33 a share, the stock was halted for volatility before closing at $115, a 250% gain that values the company at nearly $68 billion. Let's distill this historic event into 3 actionable lessons. Lesson 1, the Figma effect. Build a gravity well, not just a product. The first indicator of an elite IPO is a product that has achieved gravitational pull. Dubbed the Google Docs of design, Figma isn't just a tool, it's the essential center of its users' workflow. This is proven by the numbers. Over 13 million monthly users, including deep-pocketed enterprise clients like Google, Microsoft, and Netflix building their products on the platform. This creates a gravity well, an ecosystem so sticky that it pulls more users in and makes leaving almost unthinkable. How to apply this? When evaluating the next IPO, ask, is this product just a feature, or is it the foundational platform for a profession? That is the sign of a true economic moat. Now the lesson 2, the Figma model. Elite margins beat hypergrowth. The 2 critical numbers are its 46% year-over-year revenue growth and its stunning 92% adjusted gross margin. In an era of growth at all costs IPOs, Figma's financial discipline stood out. This isn't just a story about its 40% year-over-year revenue growth. It's about the quality of that revenue. Figma now has more than 1,000 clients paying over $100,000 annually. That signals a resilient, high-value business model, backed by the elite gross margins we discussed previously. Wall Street saw a financial fortress, not just a Silicon Valley hype machine. How to apply this? Dig past the top-line revenue growth. Look for evidence of high-value customers and strong margins. This is the difference between a company built on a solid foundation and one built on a narrative alone. Lesson 3, a perfect narrative and flawless execution. The failed $20 billion Adobe acquisition became the greatest marketing campaign in recent tech history. It perfectly framed Figma as the independent, innovative underdog and turned its IPO into a highly anticipated revenge tour. This powerful narrative, combined with a market starved for a high-quality tech debut, created a frenzy of demand. The offering was 40 times oversubscribed. By engineering an auction-like IPO process, the company capitalized on this massive demand, ensuring the stock price would explode on day one. It was a masterclass in turning a corporate setback into a multi-billion-dollar branding victory. In short, Figma combined an unshakable community with elite financials and a compelling narrative to create the most successful IPO launch in decades. Ultimately, Figma's historic debut was the result of a perfect storm, a beloved product, fortress-like financials, and a compelling narrative. It turned a failed $20 billion acquisition into a $68 billion powerhouse. At this rate, the joke in Silicon Valley isn't a joke anymore. Figma might just end up acquiring Adobe. Drop your prediction in the comments. What's the next Figma? And for more analysis that cuts through the hype, subscribe now.